Imagine a future where the encryption protecting every bank, payment network, and digital wallet suddenly becomes obsolete. Online banking, credit card transactions, government financial systems, even blockchain networks, all vulnerable. This may sound like science fiction, but it is a scenario cybersecurity experts are already preparing for. The cause of this potential disruption is a revolutionary technology called quantum computing. Quantum computing has the potential to solve complex problems that would take classical computers thousands of years to calculate. But there is a catch. The same technology that could revolutionize science could also break the encryption systems that protect the global financial system today. For leaders working in financial technology, this raises an urgent question. Are our financial systems ready for the quantum era? In this video, we will explore how quantum computing works, why it threatens financial cybersecurity, and what fintech leaders must do now to prepare. Because the institutions that act early may define the future of digital trust in finance. To understand the risk, we first need to understand what makes quantum computers fundamentally different. Traditional computers process information using bits. Each bit can represent only two values, 0 or 1. Every application you use today, from online banking to global payment networks, runs on billions of these bits. Quantum computers operate differently. Instead of bits, they use qubits, which follow the laws of quantum physics. Two important principles define their power: quantum superposition and quantum entanglement. Superposition allows qubits to represent multiple states simultaneously. Entanglement allows qubits to influence each other instantly, even across distance. Together, these properties allow quantum computers to process an enormous number of possibilities at the same time. Problems that would take traditional computers millions of years to solve could potentially be solved in minutes or hours. Major technology companies investing heavily in quantum research include IBM, Google, Microsoft. Governments around the world are also investing billions in quantum technology. Why? Because quantum computing could transform industries including pharmaceutical discovery, climate modeling, artificial intelligence, logistics optimization. But in financial services, the biggest impact may come from cybersecurity disruption. Today, the global financial system depends heavily on encryption. Every secure transaction relies on cryptographic algorithms such as RSA encryption and elliptic curve cryptography. These encryption methods protect online banking platforms, payment systems, financial messaging networks, digital identity systems, blockchain technologies. Their security relies on mathematical problems that are extremely difficult for classical computers to solve. For example, factoring very large prime numbers. A traditional computer might require thousands of years to break such encryption. But a quantum computer could do it dramatically faster using a quantum algorithm known as Shor's algorithm. If a sufficiently powerful quantum computer becomes available, it could potentially decrypt secure financial communications, forge digital signatures, expose confidential banking data, compromise payment infrastructure. Cybersecurity researchers often refer to this moment as Q-Day, the day when quantum computers become powerful enough to break current encryption systems. Here is something many organizations underestimate. Attackers do not need quantum computers today to benefit from them tomorrow. A strategy known as harvest now, decrypt later is already emerging. The concept is simple. Attackers intercept and store encrypted data today. They archive this data for years. And once quantum computers become powerful enough, they decrypt it. This means sensitive financial data transmitted today could be vulnerable in the future. Information with long lifetimes is particularly at risk. Financial identity records, government financial data, long-term banking communications. That is why global institutions such as the National Institute of Standards and Technology are already developing new encryption standards designed to resist quantum attacks. The transition to quantum-safe security has already begun. To address this challenge, cybersecurity researchers are developing a new generation of encryption called Post-Quantum Cryptography. These algorithms are designed to remain secure even against powerful quantum computers. Examples include crystals Kyber and crystals dilithium. These algorithms are currently being standardized as part of global cybersecurity initiatives. Some researchers are also exploring quantum key distribution, which uses the laws of physics to detect any attempt to intercept communication. If someone tries to observe the quantum key exchange, the system immediately detects the intrusion. In the future, financial networks may operate on quantum-safe communication infrastructure. For CIOs, CTOs, and Fintech innovators, preparation must begin today. There are 4 critical actions organizations should consider. First, conduct a cryptographic inventory. Identify where encryption is used across your systems and applications. Second, build crypto-agility. Your systems must be able to quickly switch encryption algorithms when new standards emerge. Third, begin testing post-quantum cryptography solutions. Migration planning must start well before quantum computers become capable of breaking existing encryption. Fourth, continuously monitor advancements in quantum technology. Breakthroughs may occur faster than many expect. Organizations that start preparing today will have a significant strategic advantage. Quantum computing represents one of the most powerful technological revolutions of the 21st century. It has the potential to unlock breakthroughs in science, medicine, and artificial intelligence. But it also introduces a profound challenge for cybersecurity. For the financial industry, the stakes are extremely high. Trust is the foundation of digital finance. And protecting that trust will require a new generation of quantum-safe security technologies. The real question is not whether quantum computing will transform financial cybersecurity. The real question is, will your organization be ready before it does? If this was insightful, subscribe for Executive Fintech Strategy, comment your toughest biometric questions, share with your innovation and technology leadership teams.